Hi friends. We just meeting after a day's break. Yesterday the stock markets were closed because of Mahashivratri, and we had a good session today. So we just start with the analysis. Before that, we just slightly see how the global markets have panned out in last 2 days, and we just pick up some important points on there, not in detail. So the biggest thing which I thought which happened was yesterday again. Hang Seng was up by around 3.5%. The reason was that there was a budget for Hang Seng yesterday, internal budget which the country gives every year, like India, and in that 1 billion Hong Kong dollars have been pledged by the government to open a AI hub, which means the Hong Kong market or the Hong Kong government is very aggressive on the AI technology and to beat or to counter the threat which is coming from the US. That's the reason why the index went up by around 3.5%. Today also the index went down by 1.5%, then again came in green, then again came in red. It was toppling between up and down, up and down. But there was a decent movement in Hong Kong market today as well. Just to give you a number, since the time when the DeepSeek has been announced by Hong Kong, the Hong Kong market has been up by 27%, and the Chinese market are up by around 7%. Although Chinese market, there are a lot of restrictions for foreign players to invest money. That is why most of the money actually flows to the Hong Kong market. And many of the Chinese actually, the technology companies are listed anyways in Hong Kong only. That market is up by 27%. So you will really come to know how the Indian markets have got affected because of the outflow of the FIs. The money has been going to the Chinese and the Hong Kong markets very, very nicely. Also, the money has gone into France market, as I told you, that the defense spending which Europe is trying to up because of the tariff war from US, and also because there is some geopolitical shift or the power shift which is happening between US and Europe to probably slightly to US and Russia. So that was a shift of money which happened, and that's the reason why that point was particularly important. But now the important thing to find out or to understand or to gauge is that trade over? Is that hot money trade over, or still there are miles to go? So that is anybody's guess. But what I would think is probably it is again hyped as it is hyped in US. We all know the kind of hype it is there in the Magnificent Seven of US. But just to give you a number, the fund managers in US are having the lowest allocation to these Magnificent Seven stocks of US, which includes Google, Meta, Facebook, your Nvidia, all these kind of stocks, Microsoft. The fund managers, internal fund managers there of US are having the lowest allocation of their funds into these Magnificent Seven stocks now, and that's the reason why they've outperformed the other funds, because the broader index or the broader Russell 2000 has done quite well in US. So that shift has happened from Magnificent Seven to other stocks. Similar things will happen in Hong Kong also. There'll be a lot of hype. There'll be a lot of enthusiasm, but ultimately the crux, the income, the earnings, or the long-term earnings graph is still not there. Whether it is US or whether it is Hong Kong. But how much the trade plays out and for how long, we'll just see. We'll just discuss US, and then I'll come to this point once again. But how the things are turning out and why I see that the hot money should now shift. We'll just go to some other points and then we'll again touch this point again. So Nvidia results were there yesterday, and again it has topped the expectations. I mean, the results have been good and it has beaten the expectations. But still, the Nvidia stock was down in the extended hours. It was around 1.5% down. The reason is that the trajectory of growth which Nvidia management has showed is 65% growth in the next year. Now, by any standard, with such a big company, 65% growth is a humongous growth. But problem is, last year the growth has been 245%, and this year it is 65%. So the people are not happy. Again, the problem is for the kind of expensive stock Nvidia is, the kind of P multiples it actually enjoys. Those all things will start becoming difficult as the base is bigger and bigger. And we all know how the technology sharpens itself, how the technology finds its new ways. When competition kicks in, how the price comes lower. We all seen the technology of mobile phones. You've seen the pricing power of data, how it has gone down. It's just a volume which keep on increasing, but the margins keep on going down. That's how the war has started between China and, or let's say China and US or Hong Kong and US, and it will lead to a very benign cost structure going forward. They will not be able to command so much of enthusiasm. See, we all know Google is making their own chips now. Intel is making this high strength chips now. Although yesterday the Nvidia's management told that yes, they are making the chips, but they are not as good as mine. But that's only time will tell, because all the other companies are also big companies, and they are equally into this business. They have been doing the business for the last so many years, so they all know how R&D works, how product is made. But be very careful in Nasdaq. I think I've already told you a number of times that there is a sign of bubble, and the kind of movement which the US stocks are showing. So I'll give you an example. Day before yesterday, Dow was up around 250, 300 points. It went down 200 points. Then again came up to 200, 250 points. Then again closed slightly lower to 180 points up. Yesterday also similar thing happened. It was up by around 200 points. Then again actually closed at day low almost 180 points down. So there is a resistance now on the as soon as the market are going into green, or as soon as there is a big move in the US markets. There are sellers now in the US markets. People are getting worried, and that's the reason why much of the money is now shifting towards safety. Much of the money is shifting towards those bonds, which I've been telling. So, day before yesterday, also there was a big, auction of bonds, and it was much better than expected. And we saw the bond yields going down by around 0.08 points. Yesterday, also the bond yields went down by around 0.08 points, and now it is trading at just 4.27. So just a month ago, or let's say 2 3 weeks before, these were trading at around 4.8 kind of levels, and now it has cooled off to around 4.27 kind of levels. So huge shift, huge shift has happened. That is because of two three things. One is the economy is slowing down for US, and also there's a danger for inflation, and the consumer confidence data is continuously coming down. So yesterday also there was a consumer confidence data day for yesterday on US. It was lesser than expected, and we saw a sharp fall in the bond yields, in the dollar index, etc. Dollar index is also not able to inch up. It is now trading around 106.6 kind of a levels. It is consolidating at those levels, and in spite of all the announcements of tariff from Mr. Trump, it is not inching up. The bond yields are not inching up. It is showing a sign of weakness. I think US markets have started to show a crack now. As of now, I was talking about that they're topping out, but now the price action at least showing that they're trying to crack down. So the kind of hype which Trump has brought in into the US market is slightly going down, and probably we'll see a top there. Now, if you compare India's market, which has corrected drastically by 14-15%, and if we consider that GDP growth is probably now near the trough means we have formed the bottom and we are inching upwards. China and Hong Kong, already a good trade has already been played out. Now it's probably over or very near to over. Why I'm saying is because the hot money will start shifting now again, and with the kind of hedge funds, they are not now holding too many long positions in US markets now. They've been doing in Hong Kong markets, but today, as you saw, the markets going up, down, up, down. See, whenever you have swings at lower level too much, means there's a bottom formation or a consolidation happening at the bottom. If you start seeing at top level, means there's a resistance and there are now sellers on the top. Both kind of things are happening in US and Hong Kong market, which should be a good news to India later on going forward. That is why, considering these three environments, I don't see too much of a upside even in China, US market, and Hong Kong markets now from here on. And of course, not in US. US is anyways in a bubble. If anybody's investing in US, be very very careful. I don't think much of a juice is left out in US. So again, Trump has announced that he's going to bring a Trump golden card probably 2 weeks from now, wherein if you missed $5 million in US, you will be able to get the uh, golden card, and it's virtually equal to a green card. That's one announcement which came from Trump. So if you have money and if you want US citizenship, this is one way. So Trump has also told that he's putting tariffs on EU also 25%. EU also retaliated by saying that if US puts tariffs on us, we are ready with our list and we'll be putting reciprocal tariffs. It is getting dangerous for US. Again, a New York Fed study has been done, and it has been shown that any kind of tariff war which actually will be detrimental to US only. I don't know. We all know. We all don't know how much it will hurt other countries. It is going to hurt US the most. And the most important thing is, see, ultimately, what US wants, they want the gap between the import and export to go down. It will never happen. US is a $32 trillion economy. Now, obviously, the imports will be more to US because it's a high consumption, it's a high growth country. It is a country which is high, which is the highest consumption. You can't expect a country of $3 trillion, $4 trillion, $1 trillion to match the import and export with US and the country. That will never happen because the country has its own limitations. The size itself is so less. And probably you have to protect your domestic economy to a larger scale. People will allow the tariffs to actually happen. The country will say you put your tariffs whatever you want, because problem is, if you're putting the tariffs all along, ultimately ultimately all the tariffs will be passed on to the prices, and ultimately only the US consumer will be affected out of it. Yes, the only problem is you will see a large shift in supply chains. So we don't know how much tariffs is put on each country and what product. That will change the supply chains. Probably today Brazil's pharmaceuticals may be costly to US, but if a lot of tariffs are put on India, probably that will become cheaper. So you may have something from Brazil. So I'm just giving an example. These kind of supply chains will see a shift, but ultimately the gap will always remain. And the reason why I'm saying it, this has happened in 2018, 2019 also, when there was the first tariff war from US, although it was only between China and US. But what did China do? They started routing through all the exports from Mexico and Vietnam. Now this time, Trump, in order to eradicate this, he's plugging all the lines, and he's trying to say that, okay, I'll put tariffs on all the countries so that no chain is left or no part is left in the world which can Chinese imports can come in. But China have their own way of dealing with all these things. If you remember, uh, when Trump introduced tariff on higher parcels of greater than $800 value, they started shipping the segments, the consignments in smaller parcels. But now again, Trump is saying that he want to put the tariffs on all parcels which are below $800 for China as well. Let's see whether it happens or not. But that is what Trump is saying. Overall, the whole world will be a net loser. There will be a shift in supply chains. The products will become costlier. The consumers will only get hit. Ultimately, the inflation will go up. No country is going to who's going to gain out of it. Nothing will happen. And probably Trump will also start, thinking that probably whatever his implications, if you see, probably it will be bad to his own country. So when he says, I want to make America great again, the policies are actually not in that way. So that is what happened today. In the again, other thing is that they're very close to signing that mineral deals with Zelensky. Zelensky has been blackmailed. He has been suppressed by US as usual because US is a big country, and now the mineral deals is happening. US will be getting those minerals at a much cheaper price. Zelensky has got nothing. He neither got NATO. His country got devastated. He has a big enemy now in Russia. Probably it was before also, but now they're big stronger. There's a deal between US and Russia. They'll become friends. And Zelensky is just lying in the middle. Nothing to get, nothing to gain. That's what happens when you become a scapegoat between two big countries. Why I'm saying all this and why I've told you all this news is just to give you a glimpse from where India is sitting. India is sitting poised, stable, and very quiet, just observing what is happening, what is not happening. India is the only country which has taken some steps in terms of tariff reductions. We have seen some steps in the budget. We have seen some steps post meet of US and Mr. Modi as well. So we are trying to align with US as much as possible, as much as we can. And anyways, our import exports are less affected by Trump's, these policies. Yes, there will be a shift here and there. US markets being topping out means the hot money which was going to the mother markets a lot, whether it was going to the US bonds or whether it was going to the US markets, it is slowing down. With China and Hong Kong already seeing a big rally, and Europe's already seen a big rally, it is hard to say that the money will keep on going in these two countries. Anyways, it's very difficult to make money in China and Hong Kong. We all know how difficult, and the world has seen that for the last 10 years. Europe will also face the heat of tariffs a lot because the kind of biggest trade partners these both countries are. Considering all these things and the corrections in Indian market, what has happened, India becomes a good destination for the money to come in. Whether it will come in April, the answer is no. Very difficult. The reason is because the world will wait, the bigger players will wait for the dust to settle down. But are we expecting a big, a big crash, or it's a big downfall from here in the markets? Again, I would say the answer is no. Of course, you can still remain in your trade of, if you're short, you can remain short till your 800 gets broken. But the risk reward is not good in this trade now. The risk reward is actually good if you probably take some breath, if you uh, take some stride and take your buy positions, because this is the market which will give you an opportunity to for upside rather than downside. The You can easily gain 200 2,000 points from here on the upside, but if you ask yourself whether I can gain 2,000 points at downside, the answer is no. So you should either wait for the levels to cross and then take your buy positions, or probably be in lesser quantity in short than as we're aggressive in February. We've already broken the record of 1996, in which now we have 5 consecutive series we are negative now. Today also we have closed just flat, which means that we've broken the record of 1996, and now we are 5 years. We're not broken the record. We equal the record of 1996, and now we are fifth series down the line consecutive negative. It doesn't happen too many times in India, and probably the rebound will also happen the same way. How much it will happen, we have to wait and see. But yes, the rebound is on the corner. One more step which RBI has taken is that they've reduced the risk weightage in the small segment unsecured loans from 125% to 100%. And if you are able to fulfill some conditions from RBI Bank, it can also go down to 75%. This is also equal to the consumer loans also from the banks. I think a huge step. So the kind of damage which the old governor has done into our economy by increasing the risk weights, by tapping too much unsecured loans, by keeping the liquidity extremely tight, by not reducing the CRR, by not reducing the rate cuts, not starting the rate cut cycle. All those things, this particular governor is actually spot on. This person is as though he's come with a mission, and it was looking like that he will do whatever possible in terms of the monetary policy to bring growth back. See, a lot of things have happened in last 2 months in terms of RBI government. So, rate cut has happened, CRR cut was done, for example, the previous governor for 0.5%. This governor is bringing liquidity too much. Every time there's a liquidity crunch, he comes and he does a OMA. OMA is open market operations, wherein you buy bond from the PSU banks to give liquidity in the market. Today, the risk weightage have been reduced from 125%, which was done by the previous governor, to 100%, and for some companies, it might even become 75%. He's already done the rate cut. He has already deferred that LCR ratio, which was going to go up from the March itself. He has deferred it to March 26. He's also told that one more norm, which was going to apply from April onwards, which was from previous governor, which told that you will have a 5% more cash if you're giving loans to a big infra projects. That also he has deferred. So this particular governor is actually trying to bring the growth back. He has forgotten about inflation. RBI has two tasks: to have good to aid in the growth prospects of the country, and to keep the inflation down. Inflation is anyways down. Last time we had 4.3%, and the way the vegetable prices are coming down, probably this month also it will be benign. It will be good. And a lot of people were already saying to the RBI governor that the major contributor to the inflation was anyways food items. It was nothing to do with the demand. Demand was actually suppressed. So inflation was coming to the supply side. And this our old governor could not just gauge that, and he brought the economy into a very, very tight spot. That is being released now. Yes, this will show effect in 1 or 2 quarters, but the foundation has been set. And believe me, with the kind of budget now we have, and with this kind of mandate this RBI governor is showing, we will be back to again that 7.5% growth, and that is the way to move forward. So you see, imagine China is doing a lot of bid. Anyway, China, if you tell, just tell you a news that China has given $52 billion of relief to the banks. So it's a kind of we can say, what do you say, kind of push to the banks to loan more to again fuel that growth. So the kind of stimulus Chinese government is trying to give the economy. So China government is trying to give a stimulus. Trump is thinking about make my country great again. And India is saying, okay, let me keep my liquidity tight. Let me just worry about inflation. Let me worry about all the food prices and let the country go to dogs. It cannot happen. And that should not happen. We should take all the steps, whatever is necessary, to bring in liquidity, to fuel, to stimulate the economy, and to create jobs. That is the only way we can come out of poverty. We can make our India great again, and we can become a developed country by 2047, which everybody is aiming for, which everybody is dreaming for. The shoots are there, the green shoots are all there, the you know the all the ammunition is there. It's just that you need the ignition and then a blow up. And I'm extremely happy with whatever Abhi Governor is saying. It is giving you a mandate, it is giving you it's giving an indication that the growth of Indian markets has to be back, and it will be back in 1 or 2 quarters. There's no denying on that fact. The market is very quick to gauge all these things. It will not wait for things to happen. It will preempt and move forwards. So, what are we seeing in terms of Mars series for this? So, Mars series, anyways, the last 7 out of 10 years has been positive. That is one thing. But the good thing is now we are down by around 14-15% for last 5 months. So, even the scope of growing, or let's say having a good rally in March, are anyways bigger chances. And the kind of US markets and Hong Kong, all the other markets, when they outperformed India, now is a chance for India to outperform and to gain momentum from here on. The every possible requirement is there. Probably there is an end to all the bad news. We have digested many of the bad news, and probably we are getting lined up for a next good session from here on. So it's always better to buy from here rather than sell. Yes, the sell trade has been working very well. I'm not denying the fact. The persons who like to short the markets can still remain short, but the stop loss has to be very strict of 20 to 800. And you take it from me that stop loss will also get hit, because these people are. If you see today's market, the FIs decided that we'll keep the market in a very small range, and they did it very easily. So there is no spine, there is no back from our DIs. Our institutional investors have nothing to do. They only fall on the you know what the FIs are doing, and extremely what we said. It's just hard to believe. You have a good news today in terms of banking index. At least take the index 1,000 point higher. Why only 250 points higher? Just because FIs wanted to manage the index. So they decreased IT index to a certain extent, they decreased the auto index to a certain extent, and they were able to manage the Nifty in that level, which they wanted. That should not be the case. We should have our own spine. I have to ask some fundamental questions to our DIS. If our FIs was selling and the reason was valuations, why was DIS buying? Why didn't they allow the market to sink? Why didn't they allow the market to reach to its appropriate level very fast? That is the reason why we're not making bottom. Just because of DIS. Every time the market has been able to form the bottom on any bad thing in 1 or 2 months, maximum 3 months. The reason was because DIs were weaker, FI used to dominate, they used to sell, they hardly used to be any buyers, they don't worry about impact cost, and used to form the bottom very fast. Now it is getting detrimental for us. There are no signs from DIs that you start selling. They never come on cash. They're not able to fight the FIs. But when the FIs are selling, they are buying. And they're buying great numbers. So our DIs have to understand they should be the first person to sell. Why do FIs have to sell your markets and bring down the inflation, bring down the valuations? You should be the first person to stop buying. That does not happen. It's extremely hard to believe. And there are people who have 30-35 years of experience and this don't press the sell button at all. And when they ask that, why didn't you do that? They tell them the mandate has come from the retail traders. Retail has given me a mandate and I want the money to be spent in small caps and mid caps, so I have to do that. Arey bhai, come and tell on the stage, stop taking SIPs or start coming on cash. Take out your money somewhere else. This can never be a way to become a mature market, a mature stock market. I always say if there are problem in valuations, if there are problem in markets, even if a big player is selling, you should not buy. Let those valuations come. Let those levels come, and it will happen very fast. And that will be easy for people to digest. Corona downfall happened, we corrected around 40-45% on the index. It happened just in 7 days. Nothing happened. People actually were buyers, and you see how the retailers have enjoyed after those many years because you get those levels very fast. It is this kind of grinding market which punishes people. We don't know whether to sell, we don't know whether to buy. Today also nobody knows how much to buy, how much to sell. We don't know whether the FI selling is over or not. They want to pump in more money into US, China, Japan, Hong Kong, Europe, wherever they want. I don't know. We don't know. We don't have the answer. Our people will not be able to resist them. They will manage all the F&O positions. They will manage all the indexes. Nowadays, they are able to even manage the VIX. So this kind of fallacy, this kind of lack of commitment to the markets is not warranted from our DIAs. At least I am extremely unhappy the way they have treated our market and retail players in this particular market fall. They should have warned before. They should have allowed those market to sink very fast. If you remember, in the first fall in October November, the mid cap and small caps fall only 2 to 3%. It was Nifty and Bank Nifty which corrected 10%. But if you see the chart, the mid cap and small cap corrected only 4 to 5%. That time also there was no fall. And you should come on to cash at that point of time. If at all you need a trigger from the foreign people to tell you that the market is overvalued. This is not the way to tackle the markets. People are giving a lot of trust. People believe in your knowledge. At least you should be the first people to know our companies the most. This is absolutely not the way to deal in the markets. That's the anger which is there from my part. It's always remain. Coming to the Mars series, again I would say bond yields now coming to 4.27, corrected from 4.8, dollar index to 1.6.5 or 6 levels from 110. Rupee getting stable, although rupee is slightly getting wobbly nowadays. Day for yesterday, we had a big intraday drop of 55 paisa. Today also it was up, down, up, down. So it is slightly showing some kind of wobble, but not too much. So rupee getting stable, not getting at least below 88. The bigger markets are starting to show their crack. At least in the US market, we're seeing a crack. Europe market already had a big rally in terms of defense stocks and all those things. China and Hong Kong also got their pie of money. The results of Q3 has not been bad. The results of Q3 has actually been good as compared to Q2. The Nifty valuations are now trading at discount to 10-year average. The kind of impetus, the kind of thrust that the RBI governor and the government has given in the budget and the monetary policies of RBI, the kind of green shoots visible now in the Indian economy now. RBI governor also confident we will be getting a growth above 6.2 to 6.3%. The vehicle sales are showing some kind of a green shoot. The inventory of the dealers now in autos are reduced to only 18 days. The average is around 27, 28, 30 days. Now it is reduced to only 18 days. So if at all the economy goes up and the inventory levels remain down, then you will see a big surge in the auto manufacturing and auto numbers very soon. The kind of at least some kind of a resentment that we have in terms of tariffs, because we are not a big trader, or let's say big trade partner with US. We are still having a neutral kind of relationship with US, and we have already taken some steps. Considering all these things, the short trade looks like it's very difficult to get money out of it now. The long trade on a risk reward basis looks much better. The first 2 days will be very important. If you see the first day of the series as a positive number, and if the Monday's number you see higher than Friday's number, that means longs have been made. That means the bigger players want the series to be positive. So look for these two triggers. How much rollovers have happened in Bank Nifty and Nifty in terms of F&O positions? Are they still carrying a lot of shorts? And how many shorts are there? Tomorrow's session will be very important. We should close in green. And Monday session, we should close above Friday's high. These 2-3 things will give you an indication that Mars series, where it will end up. If at all we get a different kind of signal, we'll play accordingly. As of now, the risk reward is better in terms of long trade rather than short trade. The big trade is now over. We are around 4,000 points down from our all-time high. So if you take this as a base, means 23,000, 22,500 as a base, we are almost down by 18%. Yes, if we take the base of 26,400, we're down 14%. But if the market is again, if the market has to again reach to 26,400, it has to grow by 18%. So virtually we are down by 18% from this base. Similarly, Bank Nifty from 54,600 kind of levels, we are now at 48,600, 700 levels, around 6,000 points down. So from this level, it is again 15% upside. From those levels, of course, we're down only 12%. Bank Nifty, anyways, has been shared better because of whatever steps RBI governor has taken. But considering all these things, still the long trade looks better. Anyways, most of the people are bulls. We all believe in buying more. That's why that kind of thought may also creep in. But it's very difficult to now go with the short trade. See, metal index is down by 30% from its peak. FMCG 30% from its peak. Auto index 25% from its peak. Bank Nifty around 12-13% from its peak. Nifty around 40%, 14% from its peak. Even IT index, it has lost all its charm. And again, the problem with DIS. I'll just give you, before closing this video, just give you one more example. When the IT index was down last year, none of the fund managers was saying that we should buy IT. All were negative on IT. All were underweight on IT. All were underweight on IT. All were underweight in IT. Then when the IT index went up, all the DIs of India told, what are the topics? We are very happy in private banks. We are very happy in IT and some select pockets of discretionary consumption. Now take the stocks. So the bigger player, the smart player, has offloaded all his stakes and given to the DIs. That's what happens. When it was low, it was FIs who bought the shares. At the top, they sold, and who bought? Ultimately, a DIs, meaning retailers. So that is the kind of lack of knowledge, the lack of stint, the lack of any conviction. This is what a DIs lack. And I'll be extremely, extremely critical to those people because they don't have any study in place. They don't know how to do fundamental investing, and they become slaves on the bigger players. IT index, if you see the chart now, it's showing the story. It's actually showing the story. And now you see the biggest loser will always win IT if at all the stocks have been offloaded to RDAs. They will never take this index forward. I mean, AI is happening. There's a big churning happening. We are onto an IT index today as it is at inflection point. Those were never the levels to buy. But people are bought. Our DIs are bought. And we say that DIs are very intelligent. No, I'll give you one small example. I know the video is getting slightly extended, but just want to give you one example. I have started some SIPs in July, August, September onwards. I'll tell you what is the performance of that. My one SIP is 31% down. Second is 28% down. Third is 27.5% down. My own portfolio is just down by 22% from its peak. But you see the indexes, but you see my own SIP was what is important. So my DIs don't know. My fund managers don't know. They can only boast out of it. And that's the worrisome part. That's the worrisome part. If you tell them why did this happen, you only gave me the mandate. The money was coming in small cap and mid cap. Thanks so much. If that is your view, God help us. We are our own financial managers. We should take the charge in our own hands if you have to manage our money. That's a sad statement, but that's how it is. So with this, I'll end my video today. Thanks for watching. Thank you so much.